Hello traders, in this video I would like to review the predictive power of Fibonacci that no indicator on the planet has, and that's the power of Fibonacci is the only natural predictive tool in the markets. Let's take a look on Tesla. This is Tesla now. This is a place where bullish pullback came from. There is absolutely no surprise on Tesla. Close to reversal zone where Tesla rallies from, but this is a major problem. Key Fibonacci resistance. However, if I would take a look on Tesla 2 years ago, what did Tesla look like? Take a look. This is Fibonacci reversal zone, 388, and this is key support on Tesla, 255 number. Identical Fibonacci reversal zone, 388 2017. Identical Fibonacci support is what we are dealing with on S&P right now. Take a look. This is reversal zone on S&P traders. 5 minutes since the open. Identified hours in advance. Identical level as Tesla. S&P scanner right now giving us massive number of alerts on shorts. What is the difference? What is the problem? Sellers are very weak this morning. Extremely jittery, extremely panicky market. Powerful pullback is a key. What is the problem and the difference between S&P versus Tesla? For the last few days, S&P sold off beautifully from reversal zone. This morning it does not. This morning market taking its sweet time. It's stuck. But if I convert this chart to 15, what do you see? Stunning and flawless reminder. Fibonacci reversal zone respected perfectly. August 8th, August 9th, August 10th, 11th, where S&P sold off from, as on Tesla. Not this morning. This morning buyers in charge. Selling pressure is worthless. All identified in advance. And if I convert this chart to 5, you will see how brutal and nasty this chart is. All the previous days S&P sold off. This morning pullbacks are worthless. Sellers are weak. Knowledgeable trader knows that. Patience and knowledge is a key. Shorts, worthless and weak and very dangerous. So when Tesla picking up the steam, it's a stunning news. All identified in advance. This is Tesla a year later. Exact same brick wall remains, exact same Fibonacci reversal zone. 388 is a key resistance, is a problem on Tesla. And this is Tesla many months later, stuck and frozen. What do you see? 255 key Fibonacci support, 388 reversal zone on Tesla remains brick wall for years. Identical accuracy on S&P right now. S&P stuck for the last hour as Tesla had been stuck for years. However, when Tesla crashes finally a year and a half later through key Fibonacci support, Tesla goes in free fall. Shock or not. Until the next level. And that's a beautiful news. But when Tesla crashes outside of key support, it starts finding buyers. Why? Exact same thing as S&P. From reversal zone, finding the bottom, not the place to short Tesla, the place to exit your shorts. Correct? That's a Tesla for the last 2 years. Day trading, not your cup of tea. Use everything you learn with the help of multi-market scanner for long-term investment decisions. And if I would take a look on oil, this is what oil looks like now. Finding buyers from ultimate trend inception, ultimate bottom. No surprise where oil sold off from. Fibonacci reversal zone, as Tesla had done. But this is what oil looked like years before, as Fibonacci identifies everything in advance. Oil in 2016 at ultimate bottom. The ultimate bottom in 2016, 30 area. There is no surprise. Ultimate place to buy, ultimate bottom. Buyers step in. Rules are met, take a trade. Buy the bottom, sell the top. Correct? When oil rallies 2 years later, this is where reversal zone is. All in advance, never after the fact. Oil reaches Fibonacci reversal zone and starts selling off. Shock or not, oil in free fall. Exact same place where S&P is now. Just took oil a year to do so, not the place to buy, the place to exit. All identified months and years in advance. Oil in free fall. Only obstacle remains 55 level. Identified in advance. Always. Never ever after the fact. And that's the sell-off on oil, as expected from Fibonacci reversal zone. All in advance, never after the fact. And that's the bottom. Do not buy into reversal zone. Do not short into bottom. And this is S&P now. Just like Tesla, just like oil, identical place. Shock or not, nowhere not to buy. Clear on that? So every single thing you learn in the method applies to any instrument, any time frame, any platform. So when price is stuck at Fibonacci reversal zone, you know extremely well, not the place to buy, the place to exit your longs, as played out in the previous 4 days. So crush and burn S&P pretty please, as we've been waiting very, very patiently. And that's the reason Scanner gave you alerts for shorts. Knowledgeable trader knows that. Rules are met, take a trade. What is the difference between Tesla and oil? Sellers had been extremely weak, torching us to the core. Finally, powerful selling pressure in the play. Scanner gave us multiple alerts, as expected. And if I convert this chart to 1, it's a stunning reminder. Fibonacci reversal zone is reached, not the place to enter your longs. Agree? Separate worthless selling pressure from powerful one. Sellers remain pretty darn weak. That's a major problem on S&P. And again, if I convert this chart to 15 prior days, phenomenal sell-offs. Not today. Today market is nasty and brutal. Sellers are weak. Only when rules are met you can take a trade. You can trade S&P, you can trade pound, you can trade euro, you can trade Tesla and oil in your sleep. Day trading will test you to the core. Long-term investment decisions, you need to look at the charts 5 minutes per day, 5 minutes per week, 5 minutes per month. All depends on time frame and instrument you want to trade. Choice is yours. And if I take a look on Apple, exact same formula remains. Apple at reversal zone selling off 2018, 2019. And this is what Apple looked like before. Do you remember Apple? When Apple doubles in value, despite worst earnings in 13 years, when Apple was at 91, let me remind you, Apple 2015, 2016, 91, 93 area. Horrific earnings don't mean a thing. The only thing that means everything if this Fibonacci support respected. Support respected despite worst earnings in 13 years, Apple doubles in value. But what is an obstacle ahead? 194 and a reversal zone, 214, 216 levels. Earnings are great. Apple reaches next level. What do you see far ahead? Fibonacci reversal zone. Exact same place where S&P is now. Shock or not, reversal zone is reached. Apple in massive correction for many months doing exact same thing as S&P this morning, not selling off, stuck and frozen. Charts are twins with S&P. There is no bad news on Apple until Apple crashes to 200 level. All in advance, never after the fact. And what do you see at the bottom? Ultimate low, ultimate place to buy. This is what method known for. Buy the bottom, sell the top. There is no surprise where Apple rallies from when it reaches the bottom. Identified months and years in advance. What remains an obstacle on Apple? 216, it's a reversal zone. Apple reaches this level again and again and again, and Apple stages pretty impressive pullbacks. Shock or not, exact same place where S&P stocks this morning. Always in advance, never after the fact. And that's a problem on Apple that remains. Fibonacci reversal zone, present in the room for years. And this is brutal nasty correction on Apple, stuck for months. And that's S&P this morning. Stuck for the last hour and a half. Sellers are worthless. There is no sell-off. Separate spectacular selling pressure from worthless selling pressure, pretty please, before you ever take a trade. Market notorious for fake outs. So when scanner gives you alerts on gold and rules are met, take a trade. It is that simple. And if you want to scan 500, 700 stocks, nothing is a problem. Choice is yours. What do you want to trade? We're only interested in powerful selling pressure. We have zero interest buying into reversal zone. All the interest we have to buy the bottom at key Fibonacci support. And that's the power of knowledge. And that's the power of Fibonacci. No indicator will give you minutes, hours, days, weeks, months, and years in advance. And if you take a look on pound, my goodness, take a look what's happening there. Pretty please. So here we go, massive number alerts on S&P for the shorts. Massive. Market moving extremely fast. Why? Because S&P at reversal zone. This is exact same place where pound is now. At the bottom, where pound rallied from 2016, 2017. There was no good news on pound. Pound Brexit in a play. Why in the world does pound stages the biggest rally ever? One reason only. Fibonacci reversal zone is reached. But this is pound years in advance. What was key on pound? 3600 key Fibonacci support. Where was the reversal zone on pound? 2100. Do you remember pound at that level? 2007? What do you see at the bottom on pound? 111. 111 is out, pound is done. And that's what happens when pound crashes through 136, the end of the minor trend that pound respected for 7 years. Next. And that's where pound is now. And that's where pound been rallying from. 2019, reaching the bottom. 2100 on pound, 2007, where S&P is now. Clear on that? Not the place to buy, the place to exit your long and monitor for shorts. With the help of a scanner, it's a stress-free trading. Simple. So if you would like to join us in any of the courses, please review the information on the website, on the courses section. But here's my favorite part. When student shocks me with his beautiful wedding photos. That means the world. From Wolfram. If Wolfram can do it, so can you. Doesn't matter what you trade. Here we go. 3 alerts on S&P. S&P finally pulling back with power. It's a beautiful news. Just like Tesla, just like oil, just like pound. From 2100. Doesn't matter what chart you trade. Lower S&P pulling back. Better off your long will be. Hour and a half of chop. Selling pressure in a play. Knowledgeable trader knows when to take a trade. And that's stress-free trading. Doesn't matter if you trade 4-hour chart daily or weekly or monthly, it's all the same. 4-hour chart on Forex, 2-hour chart on Forex, weekly, monthly. 700 stocks, thousands of stocks you can scan in a matter of seconds. The only thing you absolutely must remember: understand institutional bias and Fibonacci trend levels. Understand what is trend trade versus counter trend. And then take a trade. We knew since market open, not the place to buy, it's a reversal zone. Phenomenal sell-off on gold, not a phenomenal sell-off on S&P. Do you know why? Again, because daily institutional charted reversal zone, 5 last days. S&P is not. S&P at the bottom, heading higher up. Reversal zone on S&P many miles away. And this is where sell-off came from. The end of the minor trend. ultimate brick wall. Simple. No institutional levels. No institutional trends before you ever take a trade. It is that simple, no matter what you trade. So if you would like to join us, please review the information on the website. Please decide what instrument you want to trade, and you want to trade them all, not a problem. Listen to forex traders, listen to stock traders, listen to option traders, traders from beginner to hedge fund manager trading the method for the last 10 years. Any questions, do not hesitate to contact me, 925-257-4298 or info@fibinstitute.com. Thank you, traders.